Hey there, Tiffany Thomas with wealthytiffany.com, and in today's video I'm going to talk to you about how to make money with ETFs. And before we dive in, if you are serious about becoming financially free at a young age, click the link below the video in the description and I can help you do that. Alright, so let's talk about how to make money with ETFs. And first off, an ETF is an exchange traded fund. So it's a fund that is tracking something else, like the total stock market, and it trades like a stock. So you can purchase the ETF anytime throughout the stock trading hours, and as soon as you purchase it, then your order actually goes through, and you purchase it at the price that it was showing at that time. So unlike with an index fund where the price closes at the end of the day, so even if you purchase it at 9 a.m., the purchase won't go through until the end of the day when it's priced. So if you have more questions about differences and similarities between index funds and ETFs and even mutual funds, I'll post a link below this video to another one that I did explaining those differences. So today's video is just about ETFs. And the way you make money with ETFs is to, first off, purchase your ETF. So you can purchase it through a brokerage account, and the one that I use is Ally Invest. That's who my brokerage account is with. And I also have a Roth IRA and a traditional IRA at Vanguard. So if you are looking to set up a retirement account, I really like Vanguard. So when you purchase the ETF, you're going to pay a commission fee if the brokerage company that you're using charges a commission fee. I know that Robinhood doesn't charge a commission fee. And with Vanguard, if you're purchasing an ETF that is a Vanguard ETF through Vanguard, they're not going to charge you a commission fee either. If I was to purchase that with Ally, they would charge that commission fee. So keep that in mind when you are investing in ETFs. But you would just be able to purchase the ETF for whatever the actual price of the ETF is. There's no minimum requirement to start investing in ETFs. That's one of the great things about ETFs. So there is an example that I'm going to share with you, which is the Vanguard Total Stock Market ETF. And this is priced around, I think it's just under $150 right now, $150. So you could buy one share of this ETF for about $150 and get started investing right away. And like I said, we're going to go with the Vanguard example. So if you are purchasing this Vanguard ETF through Vanguard, you won't pay a commission fee. But there is always an expense ratio associated with an ETF. And this is just billed automatically. You won't actually see like a separate charge that comes out on your statement. So you want to look at the ETF that you're interested in and find out what the expense ratio is. And for the Vanguard Total Stock Market ETF, it's 0.03 right now, 0.03%, which is super, super low. That's such a great expense ratio. They actually just lowered it to the 0.03. It was at 0.04, which is still really, really good. But this one's 0.03. So you want to just pay attention that you're choosing ETFs that have really low expense ratios, because you're going to be able to make more money if that expense ratio is lower, because you won't be paying as much in fees. So the way to actually make money is after you purchase your ETF, the way I do it is I usually hold on to my investments in the stock market for the longer term. And it's definitely more than 1 year, because you're going to pay less in taxes. When you sell your stocks or ETFs, you're going to pay a capital gains tax rate. And usually, for most people, if you have just a regular 9-to-5 job, you're going to pay less in taxes if you've held that for at least 1 year. Because if you held it for under a year, you would be paying the short-term capital gains tax rate, which is usually higher. So I want to at least hold that for a year. And, I just kind of watch and see how much the ETF, for this example, has gone up over time. And if I want to switch that to a different investment, then I can cash that out and I'll pay the capital gains tax rate and a commission fee if there is one. And then I can choose to put that money toward another investment or something else that I want to purchase. Maybe I want to take a trip somewhere or something like that. So I would cash that out and put that towards my new purchase or my new investment. And you can also so that's one way to make money, is actually to invest in the ETF, so purchase it and just buy and hold for, a number of years. And when it reaches that certain amount that you're looking for, then you could pull it out and, just pay taxes on it. And then you can purchase or invest in whatever else you wanted to. But another way to make money with ETFs is if it is a dividend paying ETF. And maybe you've heard of this with stocks. Sometimes there are stocks that will pay dividends, and it's just a certain percentage that they pay to their shareholders. And this can happen, it's usually quarterly. So every 3 months, once every 3 months, you'll get a dividend payout. Sometimes it is yearly or monthly even. That's usually rare, but most of the time I would say that it's quarterly. So you'll get this dividend payout and you can choose to have that automatically reinvested, or you can not. So you can just have that sitting in your account and you can pull that money out at any point. So it's up to you. And depending on the brokerage company, I know Vanguard, you can choose whether or not to have those dividends automatically reinvested. With other companies, I'm not 100% sure how they work that. So when you're choosing your brokerage company, just ask them, do you do automatic reinvestments with dividends or do you not? If that's something that you're looking for. But if you want to just get the cash for the dividends, you could do that as well. And keep in mind, when you have a retirement account, like a Roth IRA or a traditional IRA, any money, okay, we're going to go with the Roth IRA first. So a Roth IRA is when you put money in that you've already paid taxes on. So that money is growing tax-free over time. And when you pull it out, you don't have to pay taxes. And with a Roth, anything that you actually contribute to your Roth IRA, you can actually pull that money out without a penalty. So any of the gains that you have earned on that Roth, you can't pull those out without a penalty before age 59 and a half, but just whatever you've contributed. So if you contributed the max, which is $5,500 as of last year, I think it's increased to $6,000. That's for single people. If you contributed that $5,500 last year, then you could pull out that $5,500. But if your account was, say, maybe at $7,000, then you could only pull out $5,500. You couldn't pull out anything that you actually made that made you money. So keep that in mind with a Roth. So when you are getting that dividend, that's money that you're making. So if you were actually to pull that money out, there would be a penalty for that. But if you just have it in a brokerage account, then you can take that dividend amount that the ETF would pay, and you could take that and cash it out without having a penalty. So you would still pay taxes on this money, but there wouldn't be a penalty associated with that. And with a traditional IRA, when you contribute your money, you're putting it in pre-tax, so you haven't paid taxes on it yet. So when you pull that money out, then you'll pay taxes on all of your money. So just keep in mind, if you think you're going to be in a higher tax rate later on, then you may want to do a Roth IRA, or if you think you're going to be the opposite, then you'll want to do a traditional IRA. But just be aware, if you are actually going to try to pull out money before age 59 and a half, exceptions if you're buying like a first-time house or something like that. But for the standard rule, you'll pay a penalty if you pull that money out. And with a traditional IRA, any money that you contribute, and you pull out, you would pay that penalty. So just with the Roth, anything that you contribute, you can pull out without a penalty. Okay, so that's another way to make money with ETFs. If you do have it in a brokerage account and you want to just cash out those dividends when they come every quarter and not have them automatically reinvested, then you could start cashing out your dividends. And it's usually a really small percentage. So when you first get started, you may want to just reinvest those dividends automatically. And then maybe, a few years later, when you're actually making more of a significant amount from those dividends, then you could start cashing those dividends out, and you could put that toward a car payment or something like that. So that's just another way that you could make money from ETFs. And those are the two basic ways to make money with ETFs. And hopefully this is helpful for you guys. And like I said, if you do need more information about ETFs, I'll post that link to my other video, and it gives you more of an explanation on index funds, ETFs, and mutual funds. And then you guys, if you have other ideas that you want me to create content about, please post them below. This is actually one question that I had received, so I was super happy to do this video. And if you found this video helpful, please like it and share it with someone else who needs to hear this information. And I would love to hear how you guys are getting started investing, what you're investing in, so put that in the comments as well. And if you're really serious about fast-tracking your financial freedom, click the link below this video in the description and I can help you do that. And I'll see you guys in the next video. Thanks!